All right, everyone, and welcome to MACROACE with your host, Tony. I'm also the head of the financial analyst team at FinancialJuice. Going to make it a shorter video, not too much to go through with the Canadian employment change, but don't forget to like the video, share it, and subscribe to the channel as well. But let's get into it. We've got about 15 minutes till the release comes up. Now, what is employment change? It measures the change in new jobs being added, or the net amount of jobs that are being added to the economy. And that includes both full-time and part-time workers. Now, the unemployment rate, of course, measures the number of unemployed as a percentage of the labor force. Now, it's similar to the US. You have the employment change, which uses the establishment survey data, asking businesses how many people they have on their payrolls. And then also the unemployment rate, how that's derived is using the household survey, where they ask people in the households, either employed or unemployed, working part-time or full-time, and then they gather up the information that way there. Now, how does it affect the market? So the currency market, the key thing is to understand, and what we've seen in the past, when you do see a strong employment report, that bodes well for the Canadian dollar. For the bond market, if we're talking about central bank with their rate hiking path, or whether they're going to stick to the pause at the next meeting with the Bank of Canada, bond market, what would happen is if you do get strong data, the bond yields would see a movement towards the upside, maybe anticipation that the economy is doing much better than the Bank of Canada is expected, and there may be more work for the Bank of Canada to do, or the economy is doing really, really well and there's more confidence that's coming back. The stock market in this current tightening environment doesn't really see a nice reaction. Usually see a stock market taking a hit, and we've seen that not only in Canada but also in the US too, with data being when we've seen positive data like last week, we had non-farm payrolls that came out at around 500k, which was about a 329k deviation compared to what the forecast was of around 200. If I just double check that. The forecast was for 888k, and the actual came out 517k. So it completely busted. It completely busted the forecast and crushed it, basically. So could we get a similar reaction where non-farm the employment change in Canada has it? Do we see much bigger figures if economists are expecting expecting a decline, or expecting a smaller figure, should I say, instead, to 15k instead of new jobs being added in the economy? That's something to be cautious of, because there have been surprises in the markets, and it's not something you can't really put aside. So the stock market doesn't really bode well if you do see strong data. Flip side, if we do see weak Canadian employment change data, that bodes well for the stock market, not for the Canadian dollar, and not for bond yields either. So the previous report that we had, the number of employees increased in the private sector while it held steady in the public sector. There were broad-based employment gains across several industries, including construction, as well as transportation and warehousing. The number of employees in the private sector rose by 112,000, or 0.9%, in December, which was the largest increase since February 2022. Now, it could be more so a seasonal thing that we expect bigger job gains at the beginning, around the beginning of the year, considering if there is, let's say, in the private sector where you are seeing more retail workers or warehousing to kind of finish up with Christmas shopping, or finish up to the holiday festivities, and kind of finish up any services that those businesses have. And they kind of go back down to their normal, service or level of productivity. Now, the year-on-year growth in the average hourly wages of employees remained above 5% for the 7th consecutive month in December, up 5.1%. So that's also quite interesting. That's very key for the Bank of Canada too. Wage prices are not only a key thing for Bank of Canada, but also in the US and the UK. If wage prices tick higher, then that doesn't bode well for the central bank's inflation goal of trying to bring down inflation to where they want it to do. Because if wage prices go high, people have more money to spend, and if there's less goods available in the economy, that will boost the price of goods and services, and they'll make it harder for the Bank of Canada. Now, where is the economy at the moment? So the inflation rate is at 6.3% versus the prior of 6.8%. GDP quarter-on-quarter annualized for Q3 at 2.9% versus the prior for Q2 of 3.3%. And then GDP month-on-month, more or less unchanged at 0.1%. The employment change, of course. So this is the difference here. So it was at 104k with the latest figure compared to the prior of 10.1k. So these big choppy numbers with the employment figure report have happened with the Canadian economy in the past, but considering where we're at now, where the central bank is saying that they're going to pause at the next meeting, that doesn't really help the Bank of Canada's narrative or goal of trying to pause, or maybe they have to raise by another 25 basis points maybe in the future as a possibility. But if they're confident and they said it to the markets at the last rate decision that they're going to pause, then they might be confident and stick with that, despite maybe job gains maybe job gains accelerating much higher than they would anticipate, and maybe inflation picks back up. But they said they've done their job. Their job is more or less nearly done. Just got to wait for inflation to tick down by itself so they can pause. The unemployment rate, as said, 5% versus 5.1%. And then the S&P manufacturing PMI for Canada was at 51 from 49.2. So remember, a figure above 50 shows that the sector is in expansion, and anything below that shows that the sector is in contraction. Usually, analysts and economists, they say that any figure, if the figure is at 40, if it is at 47, then that shows that there is a sign of a recessionary sign within that sector of the economy, or it's not doing very well at all. So it's a positive thing for the manufacturing sector, considering how industrial, or considering how much Canada produces in regards to minerals and natural resources. That's going to be quite key within the manufacturing sector to kind of see that sector pick up, or in the manufacturing sector pick up as well. Then the triggers for the economic release. So if we're expecting, economists are expecting 15k for the median estimate for the forecast, we've got about 7 minutes to the release. Our high estimate is 43k, so the total deviation from the median estimate of 15k would be about 28k, and then they see a low estimate of minus 21k with around a deviation of 36k. In the unemployment rate, they see a high estimate of 5.3% with a low of 4.9%. Sentiment and views. As a post-jobs data, BMO noted that it was the second time in 3 months the economy printed 6-figure increase. And Porter from BMO noted that employment is the last pillar to give out before recession. So if that's strong, that bodes well for the economy. And that means the central bank is, doing their job without hurting the economy too much. On February 3rd, you had TD Ameritrade said for the January report that they'll be looking at full-time, part-time, and public and private jobs as skew, as well as for indications of continued tightness. RBC say that they're expecting a small increase in employment this Friday, roughly around 5k workers, to add to 176,000 surge in positions that played out over the prior 4 months. So again, the key thing is strong jobs data is still enough to rock the market expectations. Investment banks as well. So CIBC, so they have a forecast of 5k with unemployment rate. They see it at 5.1. Scotiabank, 15k is what they see with the unemployment rate seen at 4.9. BMO, they see 20k. And Bank of America see 15k. So unemployment rate for the BMO, they expect 5.1%. And for Bank of America, 5%. So that is the expectations for the economic release. Let's go through the last release. So this is post the post and non-farm payrolls, and I'm showing you how the Canadian dollar reacted. So this is how it reacted. So it was a bit of a choppy reaction within the markets. Okay, one of the reasons is because of how poorly the US data performed, and of course, if the biggest dollar-denominated currency doesn't perform well, then all the other dollar-denominated currencies can be affected. But let's kind of skip ahead a little bit. So with GP CAD, you saw a nicer reaction where you saw some downside. We saw stronger reaction from the Canadian dollar from GP CAD. But you can see that it was positive for the Canadian dollar. Right, so we've got 4 minutes left. There you go. So on CAD JPY, saw a decent move. Initially, it was a quick move of about 40 pips towards the upside, whereas GP CAD had a nicer, cleaner reaction compared to CAD JPY. If we go to the deviations and bring that up for you on here. Okay, so the deviations here, so we can see here clearly that when you can see there was nearly 100k deviation, right? And we got a decent reaction from the markets. The biggest market reaction came from the dollar CAD and then from GP CAD. So these are going to be the couple that we're going to be looking out for. But you can see that, to be honest, if we're looking at around at least a 50k deviation with the employment change data, and if we do see a 0.2 deviation either way for the unemployment rate, then I'd expect a stronger reaction from the markets. So for the Canadian dollar, if we do get, as said, data much better than expected, at least 50k, then we'd expect a stronger reaction from the Canadian dollar towards the upside, and think if we get 50k below the market expectation, then we could see some downside movement from the Canadian dollar. But as said, so the clean reaction last time around was the GP CAD. So you can see here, and dollar CAD. So you can see here on CAD JPY that after about 10 minutes of trading, that's what the bracket represents. It was down by 13 pips, whereas on GP CAD and dollar CAD, so GP CAD was down by 52 or 53 pips after 10 minutes, and dollar CAD was down 62.6 pips. About 2 minutes left to the economic release. So dollar CAD, GP CAD, and are going to be the couple that we're going to look out for, see how the markets react to the data. If I just bring that up on here. Let's do. Okay. Alrighty. Let's get TICKSTRIKE running as well. Okay, we have 1 minute remaining to the data. All right. See what happens. Your cut there. Okay, 10 seconds. Okay, 150k, 150k higher than the forecast of 15k. Unemployment rate 5%, 5% lower than the forecast of 5.1%. Canadian participation rate 65.7%, 65.7%. That's higher than the forecast of 65.4%. All right, that was a decent move there. That's a big deviation. So Pew! Blew it out of the water again. Let's have a look at GPCAD. Let's see how much of a reaction that there was there. Okay, so I'll try and get what the initial move was. So that's the 60. So remember what we said last time? Dollar CAD had the biggest reaction. We'll see if it's got the biggest reaction here on the Euro CAD. Okay, there we go. So it didn't have the biggest reaction this time round. Oh, so we can see. Just change that, make it easier. Okay. Pips. There we go. So 60 pips on GPCAD. Dollar CAD, 48 or 49 pips. Euro CAD, let's have a little, see what we got here. Okay. And then 54, 50, about 55 pips down on Euro CAD. The other one I want to look at, I don't want to kind of ignore, is CAD JPY. Okay, so the data crushed market expectations. CAD JPY didn't have that big of a, yes, it had a decent move. Okay, there we go. 42 pips. I want to see what we have if the markets are expecting something different. maybe they're expecting the central bank to maybe do a hike rather than a pause. Maybe. But here, there we go. Nice and clean reaction. A big old deviation there from the economic release. So now the data came out, and I was looking at FinancialJuice for the data. And what happened is that hopefully you could see it too. As soon as the data came out, so did the market reaction. So that was 135k deviation to the upside for the Canadian dollar. So that was a decent amount there. Okay. So with the FinancialJuice site, so if you don't have access to a live voice or chat feature, or chat live voice and text feature or website or service, should I say, that provides you with up-to-date news of what's going on in the markets, why the markets might be moving in a certain direction. Or if there's maybe a particular speaker that's expected to come along. Like Fed's Powell, he rocked the markets a couple of days ago, causing a lot of volatility in one day. Now, if you didn't know what was happening, if you weren't listening into the news, something that big boy investment banks have access to, right? And if they have access to that to be able to manage their risk or capitalize on potential trades, you're putting yourself, you have less of a chance to kind of understand why the markets are moving in a certain direction. Okay, if you're not listening in to a live voice and text service, completely down to you, whatever you want to, whatever makes you feel comfortable. But that's, if you're thinking about, what is the benefit of having a live voice and text service, that's one of the benefits there. Okay, so what we want to do is, so if you do want to sign up to FinancialJuice, there is the delayed version of FinancialJuice, which all free users have. That has adverts playing on it, and there is a delay to the site on that one, but still quite useful to have a look at if you've never come across a live voice and text service. Definitely something to play with and have a little look at yourself. Now, if you've already had a little dabble with FinancialJuice on the free version and you want to go pro, and you make sure you if you don't have an account already, make an account on FinancialJuice. If it's the first time you're having a look at it, if you want to go straight to pro, you can, as said, sign up to FinancialJuice, go to your email, verify your account. Once you've verified your account, then go back to the FinancialJuice website, and they'll say here, Go Pro. Okay, click on that, choose whatever subscription you want to go with. Again, if you want to, that's totally down to you. If you do decide to subscribe to our service and pay for the service, then we can do is, once you've done that, log out of the website, okay? Log out of the feed, okay, of your account, and then log back in, and then that will make you a pro member. If you don't do that, you'll probably be stuck on this. You'll probably be stuck where it says Go Pro. Okay, you want the site to look like this. Okay, so here we go. You have the website in all its glory. So you have the economic calendar on the left hand side, the headlines in the feed in the center, and then you have the voice feature here as well. You have the free version of TICKSTRIKE, but that's limited to only 4 different assets: S&P, Eurodollar, oil, and Bitcoin. And that's restricted to a certain level of sensitivity. If you haven't heard of what TICKSTRIKE is, so TICKSTRIKE, what we can see here, okay, TICKSTRIKE allows you to listen into order flow. Okay, so another way to put it is how strong is the buying or selling momentum within a certain asset, whether that be in forex, crypto, stocks, futures, okay, internals as well. There's also that to be aware of with what TICKSTRIKE offers. So what is this here then? This is what we call a ticker, and it represents, as said, the strength of the buying or selling momentum of a certain asset. Now this plus symbol here shows you that when there is buying momentum, and when there is a minus figure, then that shows you, of course, that there is selling momentum that's going on. And what does the number represent rather than the plus symbol? So this slider here, okay, number 1 represents the most sensitive to market reactions. So if there is a bit of, you can see if there's a little bit of buying or going on, okay, then TICKSTRIKE will go off with a visual and audio alert. I've got the sound turned off at the moment, otherwise you guys will be hearing all the way through. Now, if you want to decrease that level of sensitivity and only see when the markets have a big reaction, or if there's a big amount of buying or selling going on, you can increase the level all the way to 15. Okay, as said, to see when there's a big amount of buying or selling, the momentum that's happening on asset or asset class or asset classes maybe that you're looking at. Then you can put all the way to 15, and then kind of chop and change whatever level of sensitivity you like to, what's more comfortable with for you. So that's TICKSTRIKE there. What we'll also want to do is provide you with the free trial of that. Yes, FX Burst. So unusual activity. It says, could you explain a little bit about unusual activity that Amar is working on? Now, if you've come across unusual activity in the past, you would understand that we had one big old red website, okay, which showed you the strength or the volume in stocks that were moving, okay, and if there's unusual movement. So if let's say there's a stock that's moving in the markets and there's unusual volume activity in the 99th percentile, okay, that it generally, it breaks away from the norm of what it usually moves in, how much it usually moves, okay. That's what unusual activity is. Now, the new version of that unusual activity, okay, is more sophisticated. It looks cleaner. What you can do is, not only can you look at stocks or trade unusual volume activity in stocks, right, but you can also trade unusual volume activity in forex, crypto, okay, and futures as well, right? So there's an added addition to the service that we have for unusual activity. So, again, all these tools that we have, so you have the live voice and text service, TICKSTRIKE, unusual activity. If you're a day trader, these are products and services that you definitely want to have a look at or have a go, give it a try, see if it works for you. If it doesn't, fine. What we would want then is your opinion and your feedback to make the service or product better. That's how we work, you know. We work off you guys. If it doesn't work, if it doesn't do anything that good, then there's no point having product or service that's not useful to anyone. We only want to make good products and services. Now, that is it from Financial Juice. But next week, we have two important bits of data. We have PPI and US CPI next week. Okay, it's going to be very interesting to see whether or not that changes, or what the Fed would do in reaction to the PPI and CPI data. And then we'll kind of go from there and see what happens with the Federal Reserve. But two very important bits of data that we have next week. Okay, CPI being the most important one out of the two. Now, if you want to join the next live stream of the PPI report and the CPI report, and you want to get in touch, or you want to have a look at the deviations for the economic release that I've shown you here for the Canadian data, okay, for the Canadian data that we had, okay, then you can sign up to the mailing list of MACROACE here, okay, completely free, okay. Oops, no, that's not the one. Oh, let me grab the one for you. You can sign up to the mailing list here of MACROACE, and you can get the deviations, as said, for free. And the other thing about MACROACE, when in the mailing list, is I provide you with a summary of what to expect for the week ahead. So in the Europe session, Asia, and the US, and a summary of the weekend news. Okay, it's not one big, massive email. It doesn't have graphs or charts. Very simple, because I kind of go through and discuss that with you here myself in these live streams. But there we go. That is the live link. That is the link there for MACROACE. Also, I'll put in the link for unusual activity here for you as well, so you don't miss out on that. And that is it. Enjoy your weekend. I will send you an email on Sunday, once it's done once a week on the Sunday. Okay, if you sign up to the MACROACE mailing list. And then I will see you guys next week. All right, thank you very much. Take care.